Duncan Brands Group Inc. is up about 18% in the pre-market of 26th of October 2020. So Duncan Brands have initiated talks to be acquired by Inspire Brand for up to $105, which is up to 80, which is up to 20% of this closing price of $88.79 on the 23rd of October 2020. So this site carries some of the news. This site is obviously Pulse 2.0, and it says Inspire Brands near deal to buy Dunkin Brands for $9 billion. Okay, Dunkin Brands Inc., the company behind Dunkin' Donuts and Baskin Robbins, is reportedly near a deal to be acquired by Inspire Brands. These are the details. Dunkin Brands, the company behind, is reportedly near a deal to buy. Yeah. Deal could be announced as early as today, the 26th of October 2020. However, the deal terms are subject to change and is not 100% confirmed as of yet. Dunkin' Brands confirms that it has held preliminary discussions to be acquired by Inspired Brands. The stock price of Dunkin' fell by about half in March for its high in February, but it recovered its value last month based due to investor optimism about the mobile order app and loyalty program driving sales during the pandemic. However, the company still had to make major operational changes. For example, Dunkin' Brands announced in July that it will be closing around 800 US locations permanently this year. What is Inspire Brands? Inspire Brands, formerly known as Abbey Restaurant Group, is a holding company and a franchisor of Abbey's Buffalo Wing, Wild Wings, Sonic, Jimmy John's, and Rusty Taco restaurants. The owner of Inspire Brands is Roark Capital Group. Roark is also known for making a 200 million investment in Cheesecake Factory in April. The history of Dunkin' Donuts goes back to the year 1948 when William Rosenberg opened Kettle, which is a restaurant that sold donuts and coffee in Quincy, Massachusetts. The name was changed in 1950 to Dunkin' Donuts after a discussion with company executives. Then it started a franchise model in 1955. Baskin Robbins owner Allied Lyons bought Dunkin' Donuts in 1990, and by 1998 the brand grew to 2,500 locations with billions in revenue. In 2005, Dunkin' Donuts and Baskin Robbins, operating under the name Dunkin' Brands, were acquired by a private equity consortium, which included Bain Capital, Kalai Group, Thomas H. Lee Partners, for about $2.4 billion. And by 2010, Dunkin' Donuts was hitting around $6 billion in revenue. Okay, so enough of this history and report. So let's get back to Dunkin' and see what's going on. This is what you're looking at right now is what's going on in the pre-market. The market still has close to, I would say, close to more than an hour before it opens on the 26th of October 2020 in the US. So let's refresh this and see. So what we will see here now, it wouldn't reflect what's going on now. It would only reflect what happened up till the 23rd of October 2020, but it will may or may not be that far off. Okay, and this there's even a report here as well. Let's see. A report that is not even really about. I would say it's not about that acquisition. So yes, it has a bit. It has a bit of it. Yes. And so what do the bulls say about Dunkin' Donuts? Say They identify several potential sales drivers during the coronavirus recovery period, including espressobeverages, menu specific simplification, limited time value bundles, on the go ordering, next generation drive-through locations, and expanded selection of in-store CPG products. Dunkin can expand across the Southeast, Midwest, and Western U.S. due to brand awareness, strong franchise returns, and industry fragmentation. Independent coffee chains make up more than 50% of all U.S. units. Cash-on-cash returns for U.S. Dunkin units often exceed 20%, attracting quality franchisee partners. Okay, and then the bears say that bankruptcies among QSR franchisees could escalate amid coronavirus-related disruptions due to pressured franchisee economics or over-leveraged situations from recent franchising activity. The global QSR industry is competitive with a history of price wars. The emergence of new specialty coffee concepts make it more difficult for Dunkin to stand out among higher income consumers. The Baskin-Robbins, Japan, and Dunkin' Donuts Korea joint ventures may require structural turnarounds. Yeah, this it's good to hear this sort of balanced take on this. The bears may sound a little bit off tune, but there's nothing off tune about what they're saying. That is the reality. This is what's going on. In the context of what we're seeing now, a rally of 17 to 20% in the pre-markets at the moment. So when you're hearing some of this other news, it's not, but it's important. They're all very important. So they have to provide their own take to what's going on. They have to offer their criticism. Okay, and okay, there's an analyst note here. We can just quickly read a bit of it and then go back and look at what we were trying to look at before. On October 25th, narrow moat Duncan Brands confirmed that it has held discussions with. Okay, that's what we already know. Okay, and they said, we believe this will be an excellent transaction for 16 Dunkin shareholders as it represents a 42% premium to our $75 fair value estimate, which assumes 4% average annual top line growth over the next 10 years and adjusted operating margins approaching 42% by 2029 versus 34% last year. The rumored purchase also represents 18.5 times Dunkin 2019 EBITDA of $475 million, well ahead of the 5-year average restaurant industry merger and acquisition buyout, trading 12-month enterprise value EBITDA multiple of 11 to 12 times based on data from PitchBook. From an operating standpoint, we believe Dunkin and Baskin-Robbins would complement Inspire's existing brand portfolio from a franchisee ownership 100% and geographic perspective. Dunkin could find potential franchisee partners from existing Arby's and Sonic franchises in South and West, and will be inspired as a second brand with a meaningful international footprint behind Arby's. Okay, we'll try as much as we can to see if we can include a link to this. But if we do, you would need to have an account with Charles Schwab to probably actually open the link. Okay, so let's return to what we were looking at, what we were trying to cover initially, and number of shares sold short is 2.74 million. Sorry, 2.74%. Sorry, the short interest is 2.74%, and the shares outstanding is 82.272 million. Has a market cap of 7.3 billion, which it would have gone up by now. So the trend analysis is that Dunkin appears to be in a strong bullish trend. Its 200-day moving average is upward sloping, with the MACD histogram up, above zero. Okay, it is outperformed the S&P 500 as one can imagine. So the earnings outcomes also will also come out in a few this week. So this is it is interesting. It will be interesting to watch what's going on. Measures and outcomes all in 1 week. That is this is some stuff to watch. Okay. Momentum for Dunkin is strongly bullish. The 14-period slow stochastic oscillator is above 80, the level which many analysts call overbought. This means that investors have been actively purchasing shares and driving the price higher. And that was even before this 20% increase we're seeing in the pre-market now. So unbalanced volume indicator is bullish. The slope of the indicator is positive and suggests that buyers are presently more active than sellers. Okay, Bollinger Bands are presently wider than usual as a result of greater than normal volatility that accompanied the recent price move. Events such as this may precede a pause or reversal in the near-term trend. So, as much as there's, the market is yet to, even fully digest this news, and also the outcomes are coming out. The earnings outcomes are coming out, and the market expected to be positive, which is expected to be $0.8 per share, and if this and everything comes out, what this analysis is saying, amongst other things, is that events such as this may precede a pause or reversal in the near-term trend, but so far it has looked good. There should be less reason to doubt that things will go wrong, that it wouldn't continue to advance, So the situation around the world with the COVID situation, the pandemic, more people are still going to be under some sort of restriction, and Dunkin have also positioned themselves to benefit from the whole online purchases and delivery and all that stuff, and they're right in the thick of consumption done remotely, Okay, so this video is not just about Dunkin, so we'll before we finish off here, it's just see if we can refresh. It's still 18.32%. Let's see what people are saying here before we move on to other equities we are trying to look at. So most people are quite jubilant. Okay. Yes. Okay. Okay. So analysts seem to be mildly confident about Dunkin' Donuts. Okay. So the sentiment here is largely positive, but someone who also asking some good questions. Okay, is it time to now check out or what? The Dunkin' now over 100% from its original lot at below $50 during pandemic crash. Remember, I said that they have drive-thru, and this is a big advantage during COVID-19. Okay. Okay, so we'll just quickly move on to the next equity, which will be GRTX, Galera Therapeutics. While that is coming up, we will see if we can pull it up here on Charles Schwab. GRTX. Okay, it's up 14.38% in the pre-market. Okay, Galera Therapeutics announces positive interim data from the first cohort of patients in the pilot phase 1-2 clinical trial of IS GC4419 in pancreatic cancer. Okay, so that is what is driving the market. Interim data release. That is what's driving the stock. It's causing it to gap in the pre-market. So let's digest a few things here as it concerns Caldera Therapeutics. Okay, and let's update this to bring it in line with what is going on at the moment. To update it. So it has 24.8 million shares outstanding. It has a market cap of 304.6 million, and a very insignificant 0.3% of that 24.8 million shares are sold short. You can still see some of that news as well. They're all here. Okay, the average volume for 10 days is 57,867. And what do we have so far? Okay, it has so far it's 11,800 so far. Okay, and so these are the prices in the pre-market. The market is not trading yet. The market is not open yet, but this is what's going on in the pre-market at the moment. So there's also a report here as well for Galera. This is from Reuters. Galera, sorry. Okay, not so fascinating. Okay, let's digest some technical analysis. Galera remains in a bearish trend. Okay. It must be because of the 200-day. We don't have the 200-day there. Okay. Above, in a bearish trend above, despite trading above the 200-day moving average, its MACD is beneath the signal line, and the overall trend of the security is lower. Comparative relative strength analysis shows that it is outperforming the S&P 500. So let's see if we can plot that 200-day trend line. Okay, it's a sloping trend line, so I guess that analysis was based on the 200-day trend line. So in reference to that, okay, and then the MACD signal. Let's see whether we can also do that. Mark the histogram. Okay, we don't have that what is called. We don't have the signal line in this. Let's see whether we can get it somewhere else. We don't have that to actually see it for sure what. Let's see whether we can find. Yes, that's it here. MACD convergence and divergence. Okay, this is a better one. Let's remove the histogram. Oh, okay. Okay, let's leave it. Okay, so it says its MACD is beneath the signal line. Yes, we can't see it very well, but it is definitely beneath it. But fractionally, if not even converging with the signal line. The blue line is the MACD. The orange line is the signal line. Okay, so let's move on to the next. This is momentum for Galera as measured by 14 periods through stochastic oscillators waning. This means that investors are less aggressive in their recent purchases and may even be taking profits in positions bought at lower prices. The unbalanced volume indicator is bearish. The slope of the indicator is negative and suggests that there is a lack of buy interest. Okay, the Bollinger bands are presently wider than usual as a result of greater than normal volatility that accompanied the recent price move. Events such as this may proceed or pause. May proceed a pause or reversal in the near-term trend. Okay, so the next equity will be MRTX, Mirati Therapeutics. Okay, let's find out what's also going on here. Okay, it's up 7.77% in the pre-market. And this guy is asking, what is the catalyst here, bro? Up in the premium market. Wow, bulls, you did an excellent job. Go bullish. I'm hoping to see another level here. Okay. Oh my, what a good potential start. Could this close bullish? Okay, so it's up in the pre-market 7.7%. So let's see, there might be some news here on Charles Schwab. Okay, this side, the chart is was a bit late. So 109%, how would that be of the equity held by institutions? It has a market cap of 8 billion. It's a mid-cap company, so it's not a small company. It's not a small company at all. And 10.10% of that 444.54 million shares are sold short. Okay, the 10-day average is 355,000. And before we continue news, let's quickly have a look and see what the volume is like at the moment. Do we have, okay, no, sorry, we can still find it here. Okay, we can find the volume. The volume is, okay, only 3,300 below average. Okay, so if it's up 7.7%, that means probably a good deal of, nearly all of that, 3,000 are buy, where as a result of buy transactions. Okay, so it says here Mirati Therapeutics reports investigational. Let's read everything. Okay, it reports investigational adagrasib preliminary data demonstrating tolerability and durability anti-tumor activity. Okay, it announced results from the company's mutant KRAS selective inhibitor programs for 5% confirmed ORR and 69% DCR across phase 1/1B and phase 2 monotherapy cohorts in patients with advanced NSCLC median duration for treatment above 8 months, with 50% of patients and 83% of responders still on treatment in the phase 1/1B monotherapy cohort in patients with advanced NSCLC, well-tolerated safety profile across molecular therapy and combination trials, initial preclinical data for MRTX 113. Okay. So technical analysis is that Mirati Therapeutics appears to be correcting within a long-term bullish trend. Yes, you can see that chart. You can see this is a bullish, positive, upward slope. And it is saying it's correcting. Although its MACD is presently below the signal line, shares remain 57.4% above an upwards sloping 200-day moving average. It's definitely outperforming the S&P 500. Momentum for MRTX is strongly bearish. The 14 period slow stochastic oscillator is falling as investors sell shares and drive the price lower. The unbalanced volume indicator shows that the longer term accumulation has given way to near term selling pressure by traders. And the Bollinger Bands are presently wider than usual as a result of greater than normal volatility that accompanied the recent price move. Events such as this may precede a pause or reversal in the near term trend. Okay, let's quickly move on to the next equity, which will be RVMD. Revolution Medicines. RVMD. Okay, it's up 10.83%, or rather, it is down 10.83%. Very, very sorry. It's now down 10.83% in the pre-markets. Reports progress and expansion of combination strategy with RMC 4630 new clinical collaboration. Okay, it's down 10.83%. Yes, it is down, and this we have a volume of 87 shares, which is below average. Okay, it's a small cap, but even at that, it's still not that small really in relative terms. It has a small cap of $2.7 billion, 65.92 million shares outstanding, and it has of that 65 million 0.92 shares, 74% are held short, and then are held by institutions, and 5% are sold short. So technically speaking, I think we've read some of the things that we're saying over there. Revolution Medicines reports progress and expansion of combination strategy with RMC 4630 new clinical collaboration with AstraZeneca. Reports progress and expansion. Okay. So, and it only has a It doesn't have a trend analysis. And but before that, it has a 10-day average of 327,278. And then the momentum for Revolution, as measured by the 14-period slope stochastic oscillator, is waning. This means that investors are less aggressive in their recent purchases and may even be taking profits in positions bought at lower prices. The unbalanced volume indicator is bullish. The slope of the indicator is positive and suggests that buyers are presently more active than sellers. Okay, the Bollinger Bands are presently wider than usual as a result of greater than normal volatility that accompanied the recent price move. Events such as this may precede a pause or reversal in the near-term trend. Okay, it's expecting some earnings outcomes on the 10th of November, and we don't have any consensus estimate at the moment. Okay, so we'll just quickly move on to the next equity, which is SolarWind, SolarWind, or something like that. SWI, SolarWinds. Yes, SolarWinds. While that is coming up, we check out what's going on here on stock tweets. SWI. Okay, it's down 0.05% in the pre-market. Nothing substantial there. It announces agreement to acquire Century One. Announces agreement to acquire Century One. Terms not disclosed. Okay, and it's releasing its earnings outcomes tomorrow, the 27th of October 2020. SolarWind agrees to acquire Century One, extending the scale and depth of its database performance management capabilities for Microsoft data platform. Okay, so let's return to Charles Schwab and see. Okay, it's up 0. This is saying that it is up 0.28%. Okay, it's 0. No, sorry. Let's refresh it and see. Not exactly very accurate here. Rather, it's saying down 0.05%. So we are also seeing here on Charles Schwab where it's saying it is up. Okay, so well, something we're not sure of is going on at the moment. So let's update this. So we can try and see if we can read any reports here concerning SolarWinds North America Inc. Okay, there might be some piece of news here. Okay, it's a mid cap with a market capitalization of $6.8 billion. 312 million shares are outstanding. 99% are held by institutions, and 1.25% are held short. Okay, and 10-day average volume is 260,324. Okay, and let's see whether there's any piece of news here. There is. Okay, there's not exactly very new. It's not recent news. That was on Friday. This is SolarWinds buys database services company for undisclosed amount. Okay, so the trend analysis that SolarWind appears to be in a strong bullish trend. Its 200-day moving average is upward sloping with the MACD histogram, and the MACD histogram is above 0. Comparative relative strength analysis shows that this issue is outperforming the S&P 500. Momentum for SolarWind is strongly bullish. The 14 periods, those stochastic oscillators rising as investors pay higher prices for shares. The Unbalanced volume indicator is bullish. The slope of the indicator is positive and suggests that buyers are presently more active than sellers. Okay, presently the Bollinger Bands for SolarWind of a normal width. The signal that volatility has been in line with norm for this stock. Okay, so yes, it is definitely the slope of the suggesting that presently more buyers are presently more active than sellers. Obviously, from this chart, you can see that they are definitely cumulatively more active than sellers. Okay, so this is our coverage of Dunkin Brand Group Inc. And indeed some of the other stocks we covered, which includes Galera Therapeutics, Mirati Therapeutics, Revolution Medicines, and lastly SolarWind Incorporated. Okay, thank you very much for watching this video. Like, subscribe, and share. Subscribe, like, and share. Thank you very much.